Friday, March 28th. Market analysis, Stan Ehrlich. Let me say right away that it was terrible to watch the videos on the earthquake 7.7 in Miramar. Been watching it for a couple of 3 hours already this morning. I can only imagine. It's just horrible. Enough said about that. A very disastrous situation. We have another one on our hands in the market. Not that bad, of course. We have a sharply lower market today in the E-mini, down approximately 10 points at the moment. Exactly that moment. Making new lows for approximately 2 weeks. There is no particular significant support area below the market. We had a rally up to resistance. It gapped up yesterday, finally. Well, not finally, it was only a couple of days after, and it was just last weekend that it gapped up on this week's Monday morning. So here it is Friday, and yesterday, Thursday, the gaps for the most part were closed. And I mentioned that yesterday, of course. Today, no bounce, no follow through, and a huge break. I think we're going to be testing the lows of the move, and that's back down to 55.66. And my minimum downside objective, as I've been saying for weeks now, is 54. Well, let's call it 5,500. And here's the 1 minute chart on the E-mini. Heading south, as I like to say sometimes, Tierra del Fuego. That's not right. But anyway, heading south, land of fire, southern tip of South America. So SPY, same thing, heading south. Got to make new lows, in my opinion, next week. Hey, I can't tell you it won't happen yet today. There's a chance. I've forgotten because it's been a long, long time what limit down is and what the break points are on the way down. That means the market will stop for a short period of time at a certain level because it's dropping too quick, too fast, exchange rules. But that's not necessarily the maximum for the day. There may be one or even two breakpoints before you reach a maximum. And I would think that it could very well be below the lows of the trend so far. And I'm not saying it's a trend. Large technical break is the way I like to describe it. Last time I've seen markets do that kind of thing was COVID. A few years ago, of course. Limit down or break points being tested. Now, and I don't think that's going to happen. I'm just saying you might want to find out where they might be. Spider, 1 minute chart, heading south. Now, QQQ, fairly close already. Do you realize that if we close right here, right now in the QQQ, it's the second lowest close for the whole move down since it topped out? I am looking for, of course, a move down to 458. That's that measurement bar that I put there weeks ago. And the 1 minute chart. Now on the NASDAQ, yes, same thing, basically as the QQQ. Relatively close. Might be the second lowest close if it stays here for the balance of the day, which is doubtful. Seems like it's going to make lower lows again for today's lows. And again, we're not very far away from the lowest low for the whole trend. I think it's going to get to my objective. And now that this is happening, the way it's happening, I expect it to get somewhat lower than my minimum downside objectives. And the NASDAQ 1 minute chart. YM daily data holding up better than the others, but nevertheless doing essentially the same thing. So we got a little further to go, maybe take another day or two or three longer to get there. And that would be the low of the move that we saw across the board. It was the 13th of this month, March, which is over after Monday. That's the last day of March. Tuesday's April Fool's Day, April 1st. So here we come. Another set of move down, another leg down. The 1 minute chart on the YM. Okay, so let's look at the Russell last. It doesn't do the same thing quite the same way. Trends are typically similar, but the other factors involved are oftentimes vastly different for the Russell relative to the S&P and the NASDAQ in particular, and even the Dow a bit. So support's going to get tested, and that might even hold here or the bottom of support. I wouldn't be particularly surprised if we start even going below 1955, 57, but lower. Now, the Russell 1 minute, no sign of it really stopping. Next, I've got interest rate futures. Yay! I'm finally seeing a rally that I like very much. We're up 42, 30 seconds. Very good. In one single day, we're starting to rally after a new low and a new low close, which got down to my minimum. Well, I shouldn't say minimum, got down to the expected 115.11 and hit the low at 115.08. Gosh, I missed by 3 ticks. I apologize. But anyway, it's a little late. My price was pretty much dead on, but it was late by a week or two. I wanted to bottom out at the price it did, but a couple of weeks ago. This doesn't change the picture much. The head and shoulder bottom is now looking like a last shoulder low is forming, in which case we've got a 1.5, that is, year double bottom, I think, and a head and shoulder bottom that started back on November, around the beginning to the middle of November, with a little double bottom. Here it is. That's the first shoulder low. Pivot point for the neckline. Bottom of the market, bullish engulfing, ER buy signal. That's the green bar. Preset in advance, totally 100% automated. Told you at the time that it was happening. Play the video back from January 14th. And of course, there was a bullish engulfing at the bottom of the market back on October 23rd. Play it back. It's available. So if we break the neckline on the upside at around 119, I'm going to say maybe 10,9876 in a week or two, then the minimum upside objective is for the head and shoulder pattern, an upside objective of 128.28, call it 129. You know, don't pinch pennies here with a tick or two. But that kicks in an upside objective because of the broad double bottom potential of a lot higher, and that would take probably a year, maybe even more, 145, close to 146. Now, if you look at the 10-year notes, same thing. The last low yesterday, pretty sure it was a little late. Prices are not quite what I expected, maybe a tear higher. This annotation, this little marker, is what I was looking for at the time. I haven't moved it for weeks. But now we're popping up very nicely, and I'm liking what I'm seeing. Minimum upside objective on the head and shoulder pattern is 116.27. Let's call it 117. But its double bottom is even a better looking pattern. Just a moment. Because the low that was made back on October 23 of 23 was extremely close to the same prices we bottomed out on January 13th of 25, a couple of years later. But these big patterns are not surprisingly pretty accurate. I've seen plenty of them. So the upside objective on the broad double bottom, again, about a year and a half, is all the way up on the 10-year notes up to 124.5. Big. All right. Energies, crude. Rally continues. Now we've bumped against resistance. Wait a minute. Yep. Now we've bumped against some resistance and pulling back slightly, but there's no reversal. I don't see this as a high yet, but if we keep slipping, that could turn into something bearish. But I don't think so yet. We're close to overbought. I'd love it to get overbought and then see a bearish engulfing. Then I'm going to get something like this. Will happen on October 8th of 24 last year. We're getting closer and closer to a high, but I think it could be up to 170, 150, 60, 70 ballpark. 72.80 is not out of the question. Somewhat higher, but relatively soon, few days and higher. Next, same commentary for heating oil, except it's showing some topping out signs a little bit quicker. We do have, maybe we have a bearish engulfing today. The high was 0.2580. Yep, we have an outside down day, but it's not a sell signal because we're not above 75 on my custom RSI. So This could be starting something bearish. Came up to resistance, previous lows, stopped 2 days ago, Wednesday, tried to get through it yesterday, closed on its high, but not a new high for the rally. And today, kapoom. This is a new low close for the previous 3 days. Yeah, this looks like something could be starting on the downside. Not too sure about that yet. Natural gas. Now here's the rally back up to the neckline. We got some follow-through strength later yesterday after my YouTube, and we see it following up more. That was a bullish engulfing yesterday, but I didn't get a buy signal because I don't have oversold. Nevertheless, a bullish engulfing is normally friendly, bullish. And here we are rallying today, the day after the engulfing. Now, it's not supposed to close or even get above the neckline. So that's my highest level, and it does go up a little every day. So for today, the maximum is going to be about 4.14, 15, something like that. And if it doesn't get there or turn around today, then it could be a couple of days from now, a little bit higher. But this is no change whatsoever on the head and shoulder top expectation that we're going to go down to 3.000. So we're looking for a top of this rally. I know how high it could get, and I know it shouldn't get higher than that. So anywhere between here and there, which is not a very wide space, not much more rally, I am expecting it to stall out and turn down and make new lows. So I'll try to pick that day for you, and it could be very soon. Next, we've got another strong rally in gold. Overbought conditions is a severe warning. You're not supposed to go long under these kinds of conditions because it could open a lot lower the next morning, and all of a sudden your new long that you like because it made money the first day maybe is a big loss. And that's exactly what happens to a lot of people that chase markets. Never chase a market. So I'm looking for a top very soon. I'm not sure, but that could be a very small gap right here. And if that's true, then you might have a upside exhaustion gap. Yesterday's high was 30.95. Today's low is 30.96.3. Yes, we do have a small gap. So we might have an exhaustion gap in overbought conditions with a divergence. New high in price and not a new high in the indicator at the moment. Boy, today could be it maybe. Can't tell yet. What about silver? Well, I'm right almost exactly at the right time. And the price level is a little higher than I expected for the possibility of a last shoulder high. Now, because this rally was a little more than I expected, I now have to think about this being called a double top. And then you can forget about this rally way over here as being part of that. But if you still like the concept that this is a shoulder, even though it's very close to the highest high, then you have a neckline I've drawn in weeks ago and a downside objective of approximately 20, a little below 24. It's going to take months to get there. Even the double top formation would have a downside objective in the ballpark of 24, 23, maybe even a little bit lower, but probably not. Yeah, a little bit lower. So this is quite bearish. If it succeeds in turning around and we do have a high, well, yesterday and today are pretty similar, being made today, tomorrow, yesterday that is. So this is critical right in here. These days, these prices, if we cannot continue to get bullish, then this thing could be building the beginnings of a big move down. Platinum, a little higher high, but currently trading a little lower on the day. I'm kind of stuck here. We look like we're getting blocked in by a rock and a hard spot. So there's resistance above that's been stopping the rallies. There's support below that's been holding the breaks. So I'm not going to be surprised if this doesn't start to slip back down to the support levels. Kind of think that there's a good chance of that happening. And what about copper? Yesterday it came up very sharply. I had one little resistance area that wasn't particularly very profound in my opinion. We have a high there and a high there and a low about the same and a low about the same, and that's about it. Couple highs, couple lows during a 7 day time period. I noticed some support and resistance, took it all the way to the right a few days ago, and bingo, the market stopped right at that level. Yesterday's high closed lower on the day. We can't make it, we didn't so far make a new high today, but we are still trading a little bit higher. I'd love to see a bearish engulfing because we're overbought. I would get a major sell signal like that one, like that one, like that one, like that one, all of which produced really big down moves. Next, soybeans, oil, meal. Well, I am back on track somewhat. Soybeans, another minor new high. This is now attacking the highest high for approximately 2.5, 3 weeks. That's good. I'm trying to justify a very long-term, big, broad bottom formation here in the grain complex in general. This is helping a little. The minor bear trend line is now probably broken. I'm not a big fan of trend lines that much, but I'll draw this one in real quick. Off the top, off this high, and then what do we get? Something, oh yeah, it's pretty nice. 1, 2, 3, 3 or 4 touches on the line. Broke it yesterday, still getting stronger today. Classic action when you break trend lines. So that looks nice. I need a lot more strength over time in order to be much more convinced that my long-term bottom, which I've been talking about for months, is actually going to happen. And I think there's a good possibility of that. Now, what about soybean oil? We are popping through a little resistance already. Look, that big rally yesterday is following through. One minor consideration, we just got overbought today. So let's move up another day or two, more overbought conditions, come back down to this support area, and then go back up to a little resistance. Once we start, if we start closing above 48.57, that's going to cause me to be very bullish because then I'm going to be expecting the neckline to be broken. Then I'm expecting the move to be very big, all the way up to 62. Next, we got soybean meal, which is not cooperating. Soybean meal has clearly made a new low for the trend for a long, long time. Yeah, I'm going back a couple of years here, basically. Yep, even more. Major, major long-term new low, but it doesn't at the moment seem to be able to stay below yesterday's low. That's one of the very first signs it might be turning, but basically a lot very premature in my opinion. If we have a bullish engulfing, that would help. I'd love to see that. We're not oversold, but very close. So we could do something on the upside, but if this was a standalone chart with no close friends, oil, meal, beans, etc., corn, wheat, then I can't say much bullish about it. Next, we're getting oversold today for the first time again in a couple of 3-4 weeks on corn, and we're now higher on the day by a little bit, penny. But this could be a double bottom formation. I like that possibility. If we get, and it's not very far away, above yesterday's high, about 52.50, which was exactly 52.75, and here we are at 51, that could happen very quickly, matter of minutes, literally, or even less than that sometimes. We will get a bullish engulfing green buy signal. I'm going to continue to talk about the low that was made on February 26th of 24, a little more than a year ago, as being a possible shoulder low, the head of the formation, which turns out to be past tense, and it worked great. A small head and shoulder all by itself from July of 24 for the first shoulder, the last shoulder of October 24. That pattern was great. A couple of minor hiccups along the line, but nothing to kill the pattern overall. And now we've come down. The timing looks about right. Double bottom formation, maybe. Oversold condition again. This is a prime territory for a turn up that could last a very, very long time. If this double bottom works, it's going to throw the head and shoulder bottom into a major bullish development situation, because the upside objective on this little double bottom, if it works, is going to be, let me pick it here. There's the depth of the formation right there. Grab my little measuring stick. It's almost up to the neckline. So if we have a double bottom that works, all of a sudden you're about to break out of the gigantic head and shoulder bottom also. Okay, the long-term objective 633. Next chart is wheat. Also not cooperating, although we are oversold. We're not even above yesterday's low. Still down a lot, and these are lowest lows for years. All I need now is some kind of evidence that there's strength coming into the market, and I don't see it yet. It's prime for it, but that doesn't mean you get it. It just means that you might very soon, or should very soon. Next, cattle. Well, we're not breaking the high of my bearish engulfing on March 21st, so I have to still stick to my guns, and I'm expecting the low at 199-ish to be broken soon, next week probably. We're overbought right now. We do have today's high above yesterday's high, and if we do have an outside down day today, which looks unlikely because we're not dropping very much at the moment, then we would have two major bearish red ER sell signals. So stand by. This thing could start to break down, but I say things before they start happening. That's my job, so to speak, forecasting. And I think this has got a lot of possibilities on the downside, but I'm not going to go short yet. And if I was long, I'd be raising my sell stops under the market tighter and tighter. What do we got for hogs? Not much. Minor new little high for about a week and a half. Not holding it, about unchanged at the moment, maybe down a tick or two. Gosh, still between a rock and a hard spot here. Don't have much to say. And I'm going to touch on my two stocks. I've got Shell, which yesterday had a low of 72.69 when the day before yesterday had a low of 72.70. I have to say that qualifies as a bearish engulfing outside down. Oops, I'm sorry, not a bearish engulfing. It had, my goodness, how about that? A bullish engulfing, higher close at the end of the day after I did my YouTube yesterday. And this is, again, one of my bass-backwards reversals, and we're down today a nice chunk below yesterday's low. This is an overbought condition and an outside up or bullish engulfing day yesterday. And under those two conditions, and there could be others that could be warning of a down move, but those two count for me in particular as a potential sell signal. And I talked about this on March 20th, which was the same signal, went down sharply the next day, but then it went up again. This one might last longer. There's a gap to close down here at 71.38. The other gap was closed, and I called that an exhaustion gap, which it wasn't. It came down, just closed the gap, and turned right back up. I don't have what I think is an exhaustion gap here. All I've got is, again, a bullish engulfing in overbought conditions, and I call it a bass-backwards reversal, for the lack of a better name. Sorry about that. So here we go, I think. Down. And Apple, sharply lower. No particular indication it was going to do what it's doing today because of yesterday's action. All I can say is doji means uncertainty. Higher close. I didn't see it coming today. We'll see if this thing drops off more. My buy signal, very clearly big green day, March 21, did work for 1, 2, 3 days. That's good. Plenty of elbow room for a profit. I never claimed these green signals are necessarily long-term bullish or bearish signals, which they certainly have been, but they're not as common as the shorter-term buy and sell signals. And this is a little more common. You got a good move out of it for a few days, a swing trade. So I think we might be starting something bearish here that could challenge the lows of the move, and I didn't necessarily see it coming. Um, Not a lot of indication that it was going to start this quickly. And wait a minute, one more thing. And we weren't even overbought at all. So that's Apple. The last of it, we're back to the E-mini, and it is continuing to sink. And again, it's terrible what has happened in Miramar. I feel badly for those people. I lived in Chicago for the first 25 or so years, 30, but California since then, and I lived through the Lima Parada, whatever earthquake that hit Oakland and San Francisco. I felt that. Otherwise, those people don't know what to do. They don't get earthquakes, and now they get clobbered big time. I'm sorry about that. You have a great weekend and profitable trading to you.